interesting, but yeah, that is what it is. I was a tutor for Goodie Tutors, and I've got a couple of degrees from the University of the Witwatersrand. I was a tutor for FINAC 1, FINAC 2, and here we are now. So some of you do know me. I was your tutor, and some of you just heard about me, I guess. Or some of you just need help, and I'm hoping that we can help one another. So today, before we start, can I have people in the comment section telling me whether or not they can hear me? If like at least 5 people can just give me a thumbs up, and then we can start. If you can't, yeah, I mean, if you can't hear me, you probably can't hear this. But if you can hear me, please just give me thumbs up in the chat box. I am in the chat box trying to view. Okay, receiving a thumbs up from Ayanda. Thank you, Ayanda.
Can hear you, Andzani.
Thank you, Nabila.
Can hear you.
Thank you. I got 3. I mean, I'm satisfied with 3. I hope everybody's satisfied with 3. So I'm gonna go with 3. There's some people that are just joining us now that I need to let into this. Thank you, Hope. I can see Hope says. Okay, cool stuff. So we are beginning in Atia. So I got 5. I got 5. 5 is good enough for me. So now let's begin with one of the most interesting topics for me in management, accounting, and finance. And I'm sure you guys are now at this point so tired of hearing my voice. I would be too, but just bear with me just 2 more hours and I will be out of your hair. So just to make this session more interactive, I just want you guys to please just stop me if you have questions that you need to ask. It is very important that you understand relevant costing. And the reason why I always say people need to understand relevant costing is because it is the one topic in ManAcc that it can help you understand finance. So with this said, understand relevant costing, and once you do something in finance called capital budgeting, it will be all a breeze. So capital budgeting and
just a quick question. I don't
sure.
know I don't know who the host is, but someone's trying to join the session, but they need acceptance into the group. So Neta's trying to join, but he can't seem to join. Apparently he needs acceptance into the group. I don't know what's happening.
I'm not getting, can you please try to, are they texting you now?
Yeah, he's texting me now.
May you please ask him to try the link again, because I'm the host of the meeting, but I don't get their request to enter the group. So please just ask them to please try to use the link again. And once I get the request, then I will accept them into the group. And I see Spesihle says you can't hear me properly. Can you hear me better now? Spe, can you hear me properly now? I might take that as a no. I don't know what the problem is. Goodie, may you please find out what the problem is with Spesihle so that we can fix that, because there was a chat, there's a message in the chat group that says the Spe can't hear us properly. Oh, I can hear, but I can't see you. Oh, Spe, you are not supposed to see me. I'm sorry. So you're not supposed to see me because I'm going to be writing on this a good guy that is helping us here called technology. I'm going to be writing here so you don't have to see my face. You're going to be hearing my ever so annoying voice for the next 2 hours. So now let us begin. I'm going to assume that everybody that should be in the session is now been admitted into the session because it's now 10 minutes past 1. So we're going to be looking at relevant costing today. And constraints. And what we're going to try to understand today is why relevant costing exists and why this type of costing actually, why this type of costing is necessary. So in order to understand relevant costing, we need to take a couple of steps backwards and try to understand why ManAcc exists as a subject. So ManAcc exists even though FINAC exists. So somebody would argue that ManAcc's existence is not very important, but they would be wrong, according to me, because FINAC exists. And it would be wrong to say that ManFin should not exist because of FINAC. The reason why is because FINAC is an external reporting subject. So all of the financial statements and all of the reports that we make for FINAC, we do them for the purpose of the people that are external to the business, i.e. the stakeholders or users of those particular set of financial statements, like your employees, you're looking for your shareholders existing and potential, you're doing it for the government, you're doing it for this, you're doing it for that. However, when we're looking at management accounting, the underlying word there being management accounting is for internal use by management. And relevant costing comes in to basically corroborate all of that and say that we're using all of that information that we are receiving either from whatever we're buying, and we're using it internally within the business in order to use it for decision making within the business. And that is why we have ManAcc. So ManFin, just gonna write. So I just need to let somebody into the group. They have Google. Come on, Google. Yes, there she is. Google, I hope you're inside and you can hear me. So I'm just going to continue. Can everybody tell me if they can see the board? I hope you all can see the board. I'm just going to continue where I left off. So ManAcc specifically is a decision-making subject for managers. And for those of you that want to eventually become CEOs, managers, CFOs, and whatever you want to be, your dreams are, I think in that ManAcc class, when Sandra or whoever is giving you guys class, you need to pay particular attention because it is going to be a very important thing in strategy for you. And if you're planning to do your articles in consulting, things like Bain, McKinsey, I would really, really recommend that your ManFin is on point. So make sure that your ManFin is on point. And we spoke about in the auditing session that there's some of you that want to go into various other professions except for audit. And if that is you, please make sure that everything that you need with regards to that is on par. And ManAcc, very important if you're trying to go into consulting, i.e. your Bains and your McKinseys. So what management now goes and does is that they go and gather all of this information. And with all this information, what they do with it is that they go and make certain decisions about the company. So these decisions have a large range of decisions that they can make. For example, do we continue buying this piece of material? Do we change suppliers because we found another supplier? Do we continue to import? Do we export? What happens during the coronavirus crisis? What happened, for a classical example of when management accounting was very, very required, was when Enterprise had the listeriosis crisis. They had a team of management accountants that had come in to make sure that the company stays afloat. So management accounting is literally a very, it doesn't seem very important to me sometimes when I think about it, but it's actually quite important because without it, we can't make any internal decisions as a company. But not to waste any time, let us now go and look at certain scenarios so that we can just unpack relevant costing. So for me, relevant costing, when I first came across relevant costing, my mind was blown away because I was really, really impressed at this way of costing. And what I mean by this is that costing is a large range, but relevant costing, it looks at a specific event. So without a specific event, relevant costing cannot exist, but we're gonna get to all of that stuff. So now let's just go, before we actually go into that, let's just go look at a couple of definitions so everybody can try to understand what relevant costing actually is. And I know relevant costing and constraints are taught to you guys as two separate topics or two separate modules, but what I want you to remember is that they are not mutually exclusive of one another. They actually exist together. It's just that it's easier to teach them in isolation because if you understand constraints, if you understand relevant costing, eventually you understand constraints. But constraints and relevant costing exist together because constraints usually exist when an unusual event happens. That's when usually, and I can't emphasize the word usually constraints happen when unusual events occur. So let's look at a couple of definitions. The first one being the most important one according to me is, what is a relevant cost? A relevant cost, according to this, is a relevant cost. It are those future costs and revenues that will be changed by a decision, right? So if something will not change because of a decision you make, it's not a relevant cost. And one thing that a couple of things that I want us to break down with regards to the definition is, one, the word future. So a relevant cost is a future cost and not a current cost. So if that cost is a cost that I'm currently incurring, it is not a relevant cost because a relevant cost needs to be a future cost, right? And two, it's changed. So if it can be changed, it becomes a relevant cost. So what that means is that automatically from relevant cost, we kick out something called fixed costs. So usually fixed costs, and I use the word usually because that is crazy and they can just come at you sideways sometimes. When we're talking about relevant costs, we're talking about costs that change because of the event. So let's look at an expense like rent, for example. A lot of us know that rent is it's a fixed expense. So regardless of you accepting a new order or a special order, the cost of rent will not change. And because it's not changing with any event or decision made, it cannot be a relevant cost because it is a cost that will not change. So it is not changed by a future event or occurrence. Which brings us to our next one. It's changed by a decision. So remember what I said when I started thinking about ManFin, when I took everybody back to the basics of ManFin and we spoke about ManFin actually exists because we are trying to make decisions. So at the end of the day, we're trying to make a decision, and that is another underlying factor of relevant costing, that the underlying point of having relevant costing is to make a decision. At the end of the day, at the start of the day, we find ourselves with a decision that we need to make between certain projects. And then now those projects, they need a decision at the end of the day to say, we're choosing this one over this one, or we're choosing this one over this one, and why. So we've now gone and performed all of the relevant calculations to ensure that the one that we choose is the best option for us to choose. So I want to just remind everybody that usually fixed costs do not go into the relevant cost. They do not go into relevant costing usually. Other definitions that are very important, just to quickly run through them, we've got sunk costs. So sunk costs are the cost of resources already acquired and will be unaffected by the choice between various options. So with relevant costing, we're trying to choose between relevant options, but with sunk costs, we're saying that these sunk costs, we do not include them in the relevant cost. The reason being they are past costs. If we go back to the definition of relevant costing, we're talking about future costs. But when we come to sunk costs, it says to us that the sunk cost is a past cost. And because it's a past cost, we will not put it into a relevant costing analysis because it's not future, because it's been in the past. A classic example of this is, for example, if I'm trying to make a decision about selling something to someone, a sunk cost would be maybe the plant and machinery that I'm going to be using to generate that particular item of inventory. The cost of the machine that I bought 2 years ago is a sunk cost because I've incurred it in the past. However, how the scenario would be different is that if, for example, I need to buy another piece of machinery in order to give somebody something, can you guys see that cost, I'm going to only incur it in the future so that I can only then manufacture that particular item for the customer. But if I already have that existing machinery or equipment in my books, I can't now go and call it a relevant cost because it's not a future cost, it's a past cost. And because the past cost, it does not go into my relevant cost, and we say that it is sunk. An opportunity cost is the next definition. So an opportunity cost, you might have learned a great deal about opportunity costing when you guys did equals 1A and 1B. And for those of you that were brave enough to do equals 2, I take my hat off to you and I commend you for that. So for those of you that went and did equals 2, you'd have learned a great deal about opportunity costing. And what I want you guys to remember about opportunity costing in ManAcc as a whole, I don't want you guys to think about opportunity costing only in relevant costing. In opportunity cost exists absolutely everywhere in management accounting and finance as well. So in finance, you're going to find opportunity cost, and they're not necessarily going to teach you something, but we all know that opportunity cost is the cost of the foregone option. So if I had not done this, I would have done something else. And usually opportunity cost in relevant costing, and I can't stress this enough, in relevant costing usually exist. I'm writing the word usually here so that you guys don't come back to me at a later. This is called indemnification. So usually they exist when there is a constraint. Only when there's usually for relevant costing when there's a constraint, because usually when there's a constraint we need to choose the one product over another. But for those of you that are not catching up with this, don't worry about it, we will get to that. We're just still going through some definitions. We will make sure that everybody kind of gets what is happening. So what we're saying with opportunity cost is the cost of the foregone option. So let's say, for example, I'm choosing between selling one item of I'm selling a hat to one person or another. So now for the ones that I didn't sell, I need to go and calculate an opportunity cost, and that opportunity cost is the foregone cost, and it's the cost in a relevant cost. This is a relevant cost. So I'm just going to underline stuff that are relevant costs in yellow. So this opportunity cost is a relevant cost. I'm going to underline the other ones in blue. This one is not a relevant cost, and it goes nowhere near your calculation or your determination of your relevant costs. Now we've got incremental cost. So your incremental cost, and it's just cost, guys. It's incremental cost or revenues, right? Because sometimes by virtue of you trying to produce something to someone, there's certain synergies that you can get from that particular transaction that can actually uplift your business and help you get additional revenue as well, or additional income. So an even with opportunity cost, we don't just speak of opportunity cost, we speak of opportunity cost and opportunity gains as well. So if it's the gain from choosing the other option, while the opportunity cost is the cost of choosing the other option. So the incremental cost is an additional cost or revenue from the production or sale of a group of additional units. So it is an incremental cost, and because it is incremental and you're only going to be selling those things in the future, it is a relevant cost. The last one definition that I want to go through is marginal cost. So a marginal cost, you probably learned this one in ecos as well. And the marginal cost is basically the cost of one more unit of output. So this one becomes very important, and not just for ManFin, for all your subjects, guys. The thing is, with the things that you learn in this course, in this degree that you guys are doing, is that these are things that are not exhaustive to just that one thing. They are going to be used across the board of a lot of other things. So when you learn them, you're not supposed to learn them and just chunk them at the back of your brain, guys. Don't do that. Learn these things and apply them even to your daily lives. It's very, very important. I just want to quickly go through other costs that we might want to think about before I go into the crux of relevant costing and constraints. So we spoke about incremental costs, we spoke about sunk costs, how they do not go. We spoke about opportunity costs. Opportunity costs, they go into your relevant costs. Erosion costs. Okay, so an erosion cost is basically the cost lost on an existing project. It's similar to an opportunity cost. So for example, if we've got two projects running concurrently and we want to venture into one other project, what is the effect that it's having on the other one's profits? So all of those contributions or profits that they make on the other side, we're going to need to bring them into our books. If they are good, we put them as a plus. If they are bad, we put them as a minus. An allocated cost is basically those costs that maybe come from the head office, like admin costs, HR costs, and all of those costs that are universal. Let's say, for example, you own a franchise. When you own a franchise, a lot of the accounting is done at a central office. You have to pay a certain, or they charge you a certain consideration. Those allocated costs, guys, you're not supposed to basically put them into your relevant costs because they are allocated costs and they're not specific to that particular project that you're trying to find out whether or not is relevant or not. Finance charges. This time, for this, we're going to leave out finance charges. We're going to do them when we do capital budgeting. And we're going to also say accounting stuff does not go into a relevant cost because the relevant cost takes into account cash flows. So things such as depreciation and all of those stuff, they don't necessarily go into a relevant costing type of scenario. But we will go through all of those things, guys. And oh, and you guys did not do relevant costing in second year, so this might be your first time with relevant costing, but I promise you it is one of the most amazing things in ManAcc. Cool stuff. So now let's just quickly go in through some exam technique. I just want you guys to have the exam technique so that when we do the question that we're planned to do today, you guys can just be following using that exam technique. So exam technique for relevant costing. If I'm ever going too fast, guys, blacksem me and say, hey, dude, you're doing too much. Calm down, slow down, settle down. We can't hear you. But my pen is not writing. So with regards to exam technique, what you're going to do is that you need to make sure that your discussion is both quantitative and includes qualitative considerations as well. Those of you that can't tell the differences, these are your numbers and these are your words. Use your words, guys, in ManAcc. And I think Wits likes to follow a lot of how Psycha now likes to test things. So what I realized with Wits in last year's, our final exam for CTA, Manfin, the papers we wrote, I don't know if you guys know how you write your finals in CTA, but you write like 2 papers in the same day. Both of our papers, it was just theory. We did not have to calculate anything. So qualitative considerations become very important, that you need to know your qualitative, guys. Qualitative considerations, there is no chat about it. You need to know them, because how they are moving, what they're moving towards is like a lot of students, you guys are bright, they know that you guys are the same kids that got like 90s for maths in high school. They understand that with regards to the numbers, you can compute the numbers, you can do that, but do you understand why you're doing something? And with the qualitative considerations, you're actually telling your marker why you're doing something. So it's a very good exam technique that even if the question is very silent on whether or not you should accept the decision, you need to first go through your quantitative consideration by making a calculation, then now come and consider qualitative stuff like your existing customers, your employees, your brand. You're looking at your company's strategy and your objective as a company. You're looking at your strategy as a company. You're looking at all of these things that are qualitative on whether or not you should accept or make certain decisions. Cool. So I have a list of certain qualitative factors that you can like try to go through, but it's not, obviously it's not set in stone, guys. It's just a template that I used to use that would help me to generate points. So it's like a 5-step process, and then one, no, I need a black pen. One, in order to make a decision, for me, it was important to always understand, I need to identify what the decision is. So what decision am I trying to make? I need to identify that particular decision. What decision am I trying to make? Am I trying to forego something? Am I trying to sell more? Am I trying to accept a special order? What am I trying? So around that, I might just start speaking about the fact that, okay, my decision, when I identify the decision that needs to be made, it's accepting the order. Do I have a relationship with this new client? I don't think that's a good idea, because I don't have a good relationship with this client. But let's say I'm trying to accept an order from an existing client. I'm like, oh my goodness, the decision is that I'm trying to accept an additional order from this customer, but I already have past experience of this company and this customer, and they've been paying timeously, and they've been a good whatever corporate citizen. They've just been good. So those are the qualitative factors that you're thinking about. Number 2, I used to tell myself to identify alternative actions. So what we mean by identify alternative actions, guys, there's always consequences to every decision that you make. So it is very, very important that when you're trying to make a decision, you always consider every other things. So what we mean by that is that you can look at a host of other actions that can happen should you decide to take that particular decision. This could include like laws and regulations that you might be in breach of. It can also include your experience as a company. Do you have the right management skills or the right management capacity to go now and do that particular certain product? You need to speak about everything that you are thinking about. So what you can do is that you can open up a company and start at the top floor. You say management sits here. Now the junior managers sit here, the official clerks sit here, the workmen sit here, and we just go through each and every and you ask yourself, what could go wrong in this particular area? Should I take this decision, right? It can help you to generate points. Number 3 says, identify the relevant event that can happen, that can occur. So here we're talking about, again, it's like a consequence, but here we're looking at it from a different lens to saying that if I were to choose this customer, what happens to my existing customers? So for example, let's say I choose to produce a special order as opposed to my existing order to my existing clients, and I have a constraint. But now I've got these customers that won't be getting their bread this month. What is that going to do? What is going to happen then? Do I still want to take this once-off order? Well, I've got these customers that have been buying from me for 5 years now, and I know that even next month they'll come back. But now this new guy is coming to me and is asking me to sell him something for a great amount of money that would help my business very much right now. Do you see now that you've got a bit of an ethical dilemma or a business dilemma, actually, to ask yourself, what do I do in a situation like this one? Do I go ahead and sell to my existing loyal customers, or do I take this money that is easy money and I'm looking at it? I can do this, but if I do this, I'm affecting my existing customers, and it becomes a bit of a business dilemma that you might have. But these are all the considerations that you want to make. But for academic purposes, you never want to choose your new special customer over your existing customers. And the reason why you don't want to do that is because with your existing customers, you're looking at them over a long-term point of view. And what you're saying about that is this is a qualitative consideration, because you're saying that over a long term, what is going to happen is that this once-off order is going to go away, definitely. But these guys that have been buying from me for years, they are going to be the same people that are still going to be buying from me. So what happens there is that you never want to choose this new special guy that is just coming in the month of May. You want these guys that have been with you through thin and thick, the people that have been buying from you since the incorporation of your company, and you want to put those on a pedestal and choose them over any special orders. Number 4, you need to align a set of probabilities. So when you're looking at set of probabilities, you're basically aligning them to a particular decision that you're trying to make. You're trying to ask yourself, with this particular decision that I'm making, what is the probability of those events that I say that can occur, of them occurring and actually affecting my business either in a good or a positive way? Remember that when you're looking at all of these considerations, guys, you're not just looking at the bad stuff. I know that usually we like to fill it with a lot of bad stuff and we try to get marks from that. But if you look at your solutions, especially for ManFin, very closely and you read them in highlights, I want you guys to start doing this. When you do your solutions for ManFin, guys, just maybe choose a color like a highlighter, yellow one, and highlight all the positive things they say in the qualitative considerations. You will see that those qualitative considerations make up about 20 to 30% of the total mark population. But if you're constantly trying to look for those bad ones, excuse me, if you're constantly trying to look for those bad ones, you're going to run out of points and you're going to end up just repeating one point in different English. You don't want to do that. So what you can do is that you can just consider both the good and the bad. When you align your probabilities, what is the probability of this actually becoming a success? What is the probability of this becoming a total flop? Now we go and identify the outcome. So these two, I would link them with one another because, I'm sorry, wanna move this thing up there because I'm never working up there. So these two, they basically go in one hand in hand because the probability will always lead to an outcome. So you need to identify your outcome when you're dealing with your qualitative factors, right? So those would be your qualitative factor considerations. You need to look at, guys, a holistic picture. You need a holistic picture of the entity. Holistic picture of the entity is very, very important when you're about to do your qualitative considerations. Reason being is that you want to attack every single area that the business is involved in and not just particular areas. I just want to rush through now because I'm trying to get to the paper and it's a bit of a lengthy scenario. So now let's go look at your quantitative factors, sorry. So your quantitative factors can be one of two. So how you present your relevant cost. Your relevant cost can show, can be the full or what I call the incremental. This one here, guys, you need to be a fast writer. So if you are currently using the full one, I'd really recommend that you learn how to be fast with it if it's the one that you're most comfortable with. This one for me was very difficult and I never did it a single day when I was in school. I would really recommend that you try to learn this one as best as you can, the incremental one. The reason why I don't really recommend the full is because it actually takes more time, because let me show you the difference between the two. So the full one says to you, you have 3 columns pretty much. You say with the decision. So you prepare a set of financial statements with decision, and then you prepare another financial statement without the decision, and then you get the difference. While with this one, you only put in what is incremental. So it's very important that you only put in what is incremental. So everything else without and with. So basically here, you just have one column, which is usually just this one. But for this one, it takes a bit longer because you have to calculate if I have the decision, you have to calculate without the decision, and then you get the difference. At the end of the day, it is going to give you the same amount of money. And this one here is actually more accurate, but for academic purposes, it takes way too much time. While this one here, it takes less time, but you're more likely to make mistakes. I have to say that you are very likely to make mistakes. And this one here takes into account all of the fixed costs. But the thing is with the fixed costs, how they are going to be is that you're going to have 10 here and 10 here, and they're going to cancel out each other, and you're going to have 0. While with this one, with fixed costs, they just do not get included at all. So that's the difference between the two. I really do recommend the incremental for anybody that is interested. Cool. So relevant financial inputs, what we're doing there is we're taking future cash flows that will differ between the various alternatives being considered, right? So I just want to actually continue into the main body of that, right? Okay, so I'm just going to quickly read through some certain considerations and then other considerations that you might want to put in. Does the decision align with the strategic goals of the entity? Are the estimated that are included in the calculations accurate? Is customer satisfaction consideration? You need to consider that new and existing customers. You need to speak about internal deficiencies in operational factors. No, internal efficiencies and operational factors. How is you selecting one decision over another going to affect your operation as the entity and the efficiency of your staff? Lastly, we're going to look at future opportunities. If I take this order, how is it going to, what effect is it going to have on my future operations? Like, am I still going to have enough customers? It's just like in the past when I gave you guys that template, we spoke about how if I now choose my new customer over my existing customers, what will the effect be on my existing customers? excuse me, will they be willing to come back? I think I'm really, really tired. I'm just tired of moving my jaw at this point. But the future opportunities is basically asking yourself, if I choose this decision today, what will happen in the future? I might have a company that is the biggest competitor of the company that I'm trying to give an offer to today. I might not even be able to get the contract or the tender in 2-3 years time because I have now transacted with their biggest competitor. So it is a very, very thorough and complicated, it's a very, sorry, I just want to see this chat from, also, so sorry, Hope. So the group chat, I sent it to the Manfin group. Has everybody received it? I hope everybody has received it. I'm just gonna quickly go out of the Zoom and I'm gonna quickly run to WhatsApp to see if I've sent it to the right group. And the answer is yes, but Hope you just got added after the paper was shared. So what I'm doing, Hope, is that I am transferring it to you. I've just sent it to you on your personal phone. I just don't want to send it to everybody for the second time because everybody else now has it. Please let me know once you have received it. I have sent it to you. Hope. Just going back. Sure.
I don't have the.
Andzani,
Yeah,
sorry to disturb you. I received it.
Oh, have you received it? Who else says they don't have it?
Yes,
I don't have it. I'm not on the Manfin 3 group. I'm only on the, I think it was auditing.
Okay, who am I speaking to?
Speaking to Neta.
Okay, I'll just send. I'll also send it to you in your personal capacity, so I don't resend it to the entire group.
Thanks.
I'm sending it now. So as I was still saying, you do not discuss the calculations themselves when you're going through a qualitative consideration. So discussing the actual numbers is not a qualitative consideration, guys. What we say is a qualitative consideration is when you look at all the other existing factors that exist within that particular, I'm not finding your number on this thingy that I have here. Do you have a second name that I can please use?
Martinette. Saji.
Sorry?
Martinette.
Machinete.
Yeah.
All right, no, I found you now. They saved you with your other number. So I'm just going to transfer these to you as well. I hope they are clear. There we go. I just sent it to you. Let me know if you received it.
Okay, thank you.
Sure. So now let's go and look at what relevant costing and this is still exam technique, guys. So with relevant costing, you remember all of those costs that we spoke about, like your sunk costs and all of those other costs. What you go and do in a relevant costing calculation, at the bottom of the table that you're going to be using to do your relevant costing, you're going to explain to the marker that these are the amounts that I did not include into the relevant costing, and you're going to tell your marker why. Very, very important, guys. So what you're going to do is that you're going to have this table with all of your relevant costs and whatever, and then you're going to write there and say equipment expenditure. Whatever, you guys know what I wanted to write. And you write, say, sunk cost not included. Do you guys see that? And then you go to another cost and you say, what's this? Rent. You say it's a fixed cost, so it's not incremental. So you need to, at the bottom of this table that you've drawn for your marker, where you've put on all of the amounts that you wanted your marker to see, what you're going to do at the bottom of that is that you're going to explain to your marker that in the scenario, there were certain words, there were certain amounts that were given to me, but I didn't use those amounts, and you're going to have to explain to your marker why. It is very, very important that you explain to your marker why, because all of those things that have not been included in the relevant cost are in fact going to give you a mark. Right? So there's different decisions that we can try to make with relevant costing, and I'm just going to go through them one by one. So the different decisions that we can try to be making is maybe a special selling price decision. Usually it's used for a one-time order So for example, let's say you're running a business and the government wants to distribute, you make masks, I guess, and now the government wants to make masks for the entire South Africa. So they come to you and they say that we want to make masks for the entire South Africa, but you guys know that the government is not your, let's say assuming that the government is not your usual customer, but they're coming to you this one time and saying that, look, dude, we know you make masks, it's a pandemic, please give us masks. That is a special order. So now you've got maybe even a special selling price. And then now the second one, the second reason why you'd want to have a relevant costing, maybe I should actually write those things out here so that everybody can see them. So I'm going to say uses for relevant costing. I said one, it's a special order. So when somebody, usually a once off. And then number two, it's a make or buy decision, which is an outsourced decision. So what we mean by this one is that sometimes you get that at a company has like something that they are outsourcing from another company. So, but you guys, I don't think you guys were at Wits at the time. So in 2015, 2016, the Wits cleaning staff was not employed by Wits. They belonged to another company called Ukweza, and Ukweza would provide Wits. It was called Ukweza and Royal Nandi. So these two companies would provide Wits with cleaning services, and Wits would pay directly to Ukweza, and Ukweza would pay all of the cleaning ladies and all the cleaning men that cleaned for us the university premise. But now, after that, they had to make a decision of whether to make or buy, and not obviously not to buy the people, but whether to insource the cleaning service or whether to continue to outsource it to somebody else. So that's when you might need a relevant costing, because when there you're going to try to assess what the costs are. If I employ these people internally, what will the cost be? But if I just get an outsource, like an agency to come and do it for me, and that I pay the agency, what are the costs and which one is the better decision? But remember, that is not just the only consideration you're going to make. You're also going to have to make a decision on the qualitative considerations of whether or not to outsource or to insource a certain item. So that is a classic example of make or buy. Number three, it's a decision on the replacement of equipment, whether to continue using old equipment or to buy new equipment. So this one is replacement of assets. I'm just going to say assets. And then now here we're trying to find out what you were going to do in this particular scenario is that you're going to look at your business, how it's going to function with the new equipment and with the old equipment. Usually for this one, you would need to have a 3-block thingy where you say new equipment, old equipment, and then the difference is your relevant cost there. But some considerations that you need to make for that is things like, do I have a disposal value or a residual value? Is there a residual value in there that I can get money from? What are the costs of the new machine? This one is not very widely tested, but you never know, because Wits is always trying to come at people sideways. They can just test it for you guys, just to test how strong you are, and especially because you're at home, so everything is possible. So what you're going to see is also the operating costs. And here, depreciation goes in here. And you're going to consider depreciation and how that can affect your relevant cost, because it becomes a relevant cost even though it is not a cash flow. I'm just going to highlight that one there. So with this third one here, are we replacing the asset or are we keeping the old one? Other things that you want to also consider is the efficiency of the new machine. You also want to consider how long this new machine is going to take to install. It might take a month. Can you take a break, a month's break as an entity to wait for this particular machine to be built? Are your operations large enough? Do you have enough space in your factories, or do you need to extend the factory as well? There's a lot of considerations that you might need to go through when you're trying to replace an asset. And I want you guys to keep an open mind. For those of you with cars or on your second car, you can just start thinking about, or when I had my first car, when I started thinking about buying my second car, these were the things that went into thinking about that. Even if it's a cell phone, when I bought this one cell phone that I had, this is what I had in mind. But now I'm thinking, if I get a new cell phone, what are the considerations around that? Be broad about it. That's why I want everybody to be, I don't want you guys to think of these things in ManFin, because these things are not only in ManFin, they affect our daily life. So for example, replacement of assets, when you want to buy a new cell phone, you always consider all of these new things. Maybe it has more space than your previous one. It takes better pictures. For those of you that are involved, like this IT stuff, you can see that maybe it's got a better, I don't know, operating system. Is that a thing? It's better. So that's why you are buying it. And now you need to look at, what will I do with my old phone? Am I able to sell my old phone for a certain amount of money? And what can I do with that money? Can I use that money that I get from my old phone as consideration for the new phone? A lot of these things are, guys, very, very important. But the underlying thing to consider the most when you're trying to replace an asset is, what is wrong with the old one? If nothing is wrong with it, why are you replacing it? You need to understand that. It's very, very particular to say to yourself that, why am I replacing something if it's not broken? So that is where you would want to start. Why do I want to replace the old asset? I know sometimes it's not broken and the new one can give you better, sorry, it can give you better efficiency, but that is a way you can generate a mark when you can go and write for your market. The reason why it would be a good idea to replace the machine is because it's not so efficient. And if they didn't say anything about the efficiency of the machine, it's still a mark generator where you can still go and say, my qualitative consideration would be the fact that there's nothing wrong with this machine. It's still giving me the right capacity. It's not breaking. There's no breakdowns. Maybe I should wait a while. We should wait a while as an entity, and we can consider buying another one in the future. Now, new machines, what is annoying about them is that you need to train staff to use them. So now it's just an additional cost. Now you have training your staff cost in order to be able to use that new machinery, because the new machinery might not be the same one as the old one. Do you have enough resources to be able to distribute, to take money and send it to training of the staff in order for them to use the machine? And remember, when staff is in training, they're still getting paid. When you're training, you're getting paid, but the downside to it is that there is no production, meaning that you're not making any money, but you still have to pay these people. Do I have enough money to have these people sitting in a room all day learning how to use this bloody machine, and I'm losing money on it? Excuse my French, I'm very sorry. And then it's maintenance of the machine, but that I'll just put that with depreciation here. And then we also need to consider, lastly, the quality. Is the machine of a desirable quality? If it is of a desirable quality, what I go and do is say it's a qualitative factor to say that, oh, the new machine is of a higher quality than the existing machine, and therefore it might be more durable and buying it over a long term. Other things that you might consider, guys, you can read these things through a scenario. They can even tell you that your supplier is having a sale. So because your supplier is having a sale, they tell you 50% off. You'd maybe want to go, even though the old machine is not broken, you'd want to replace it perhaps because you might have plans to replace it in 3 months' time, but right now you have a 50% discount and you might as well take up the discount today. So all of those things that you need to consider. So the fourth one that you would want to use relevant costing for is discontinuing a line. So usually in a company, right, especially this one would be for a company that sells more than one item. Let's take, for example, Coca-Cola. Coca-Cola sells a whole range of items, ranging from your Sprite, your actual Coca-Cola. They sell I think they sell dry lemon. They sell the Fanta range, so your Fanta grape, Fanta orange, and Fanta pineapple. But now let's stream into the Fanta range. So now we're taking the microscope into the Fanta range. So now in the Fanta range, we've got a couple of Fantas, your grape, your orange, your pineapple, and your mango. So what you're trying to do there is that, let's say one of them is making a loss. And now what you're going to try to do is that you're going to go and perform a relevant cost to see that, if I were to discontinue the mango flavor, what effect would it have on the other sales? sometimes discontinuing one product, guys, is not a bad thing because it can raise your profits significantly, especially because the Fanta brand represents its profits, its profits as one thing, the combination of Fanta, pineapple, grape, and whatever, and all of the other ones, all the flavors, they present them as one. But imagine now the Fanta grape is making a loss. If you're discontinuing it, that loss that you are having is no longer there. That means your profits are going up. Do you guys see how the relevant costing would be important in determining whether or not you want to discontinue a line? Very, very important. And for me, it was particularly interesting when I looked at it at one of my clients where they basically made an analysis of whether or not they should discontinue a whole business unit. And at the end of the day, they ended up actually closing one of their subsidiary companies because it was making a loss, and cumulatively as a company, it was bringing down the company profits. By discontinuing that one company, the company profit started looking up now, one by one, because that minus was no longer there. So this is very, very important. And I know that in ManFin, they really do like it, but not for exams, usually for small tests. So let me just put this here. This usually for exams. I know in exams a lot, we have special orders, and usually this one here, I know for tests. So for test 2, let's look out for this guy here. But even this guy here is pretty important, the special orders, because even this question that we're going to be going through today is special orders. So the fifth one there is sell now or process further. Remember when we did process costing and we started speaking about joint products and further processing of certain products? There are certain products, guys, you can sell them at a certain stage, but there's certain products that you can just change them into something more than what they are. Let's take sugar, for example. With regards to sugar, I can always just sell sugar, and people would want to buy sugar because people want to make tea, they want to bake with sugar, they want to cook with sugar, whatever people use sugar for. But I can also just now change it and make it sweet. Do I want to process the sugar further and make sweet? That's a decision that you want to make. And what you want to do, you're going to be doing the exact same thing that we've been doing with all the other ones. You're going to ask yourself, if I venture into selling now, what are my costs and what are my returns? So how much can I sell sugar for? And how much are the costs related to sugar? But on the other hand, if I process further, now I have sweets. What are my costs for making sweets? What are my revenues for making sweets? And then you're going to compare the two, and then you're going to decide on whichever one. That is how you're going to decide whether to sell now or to process further. I think this is my last one. Or product mix decisions. So product mix. So product mix is basically saying you've got this company, you're asking yourself, what do I want to sell with what? So I'm just going to give an example with alcohol. I hope this is not an offensive topic for everyone. I'm trying to tread those surfaces very carefully. But just to give an example, some alcohol companies have started selling gin together with a tonic, because a lot of people like to dash their gin with tonic. So what they do is that as a forward-thinking way, and to also encourage people to buy their brand, they now have a product mix, being the gin itself and another thing, the tonic that people use to dash the one with the other. So it is very important that sometimes in a company, they're going to match products and put them together, sell them together, or sell the one with the other, usually when the sales of the one is struggling. So I know that they're likely gonna try to increase the sales of the one by putting them together with something else. So all of those things that you see, sometimes they say combo. It's not necessarily, the combo is not necessarily they're giving you, they're saying, oh, we are being nice, we're giving you this combo of fruit and veg. Sometimes it's not that. It's usually maybe because, let's say in this combo of fruit and veg, you've got onions, potatoes, and garlic. Maybe the sales of garlic are not doing very well, and they're trying to improve the sales of garlic by putting them in a combination or a product mix that is going to help the buyer to purchase not only the onions and the potatoes that are doing well, but even that item of garlic that is not doing very well. So usually when you see that big combo item and it says plus free whatever, don't get too excited. It's probably them trying to save that product line, to say that we're putting it in a product mixture to make sure that that particular thing sells. And usually number 6, your product mix, if that fails, what they usually do is that they move on to number 4 to say that we must now start thinking about discontinuing the entire product, which is quite sad, but it's something that is very it is very necessary. So if you've tried another thing to try to put it as part of a product mix, you're now saying it's still not working out. What is my next step now? My next step is to consider discontinuing the product altogether. So that is what relevant costing basically is. Relevant costing is basically a decision-making tool that is going to help you make a decision about all of the things that we just spoken about now. So relevant costing is a decision-making tool. Remember, decision-making, very, very important, to help us make decisions about all of the things that we've just spoken about here. And I want to make you guys remember this, that I said what I said about relevant costing. Relevant costing is a ManAcc thing. But once you do finance, you're going to be doing something called capital budgeting, guys. It's the exact same principle. The difference is that both of them are in the future, but relevant costing is in the short run, while capital budgeting is in the long run. So with capital budgeting, that's where you just have to discount your cash flows to today. But with this one, relevant costing, there is no discounting whatsoever because it's a short-term period. With it's the exact same thing. So when you guys do capital budgeting, I want you guys to revisit the notes that you have made for relevant costing and try to link them together. You will see that the only difference between the two is that for relevant costing, for capital budgeting, we take into account a lot of taxes. With tax, we take a lot of tax into account when we're doing capital budgeting. And I don't want you guys to feel alarmed. It is not difficult. It's not the tax you learn in tax. They tell you all of the tax rules. But with relevant costing, we're making a decision for the next 3 months, for the next 6 months, for the next year. That's why there is no need for us to discount those cash flows. But when we're looking at capital budgeting, we're looking at 3 years, 4 years, 5 years time, and we definitely need to discount those related cash flows. So do not forget relevant costing and revisit your notes on relevant costing once capital budgeting commences. Now let's just go and look at constraints before we quickly go and look at the scenario. And I will try not to take your time with relevant costing, but I know myself, I always get carried away. But this time around, I'm going to try my best. So with constraints, what happens with a constraint is that a constraint is a limited resource. So let's just try to understand what that actually means. If I'm moving too fast for anyone, please guys, stop me and tell me, hey dude, hey, we are not, the combos, they're not communicating. We need you to slow down because it's very, very important that you understand constraints and relevant costing because they are very widely tested in CTA, but they are not retaught. Tested in almost every CTA paper, not retaught. It's like IS-8 that you guys learn in FinAcc. IS-8 is tested in 3rd and 4th year very immensely, but never retaught since it was taught in 2nd year for you guys. So a constraint is a limited resource. And it restricts production. So a resource in this context, guys, is it's over and above like small things like it's not necessarily maybe the inputs that go into making the final output product. So it's not the material. Let's say we're making highlighters. I'm sorry, I have a lot of highlighters here because I've been preparing for the session. So I'm going to use highlighters as an example. So it's not necessarily the plastic and all of those things that go in there. Guys, it's everything. It's a resource can be anything. It can be money. It can be employees. It can be floor space. It can be the inputs themselves that go into making the product. But what I was trying to raise is the fact that it's not necessarily those. The list is not exhaustive to those. So the list is quite lengthy and a lot of resources, but resources is not something that we need to be worried about. You will see them in every scenario. Okay, so the reason why we've got constraints is because it prevents this. It prevents the full production from being achieved. I'm sorry, my handwriting is getting worse. Okay. So what happens with constraints is that they cannot exist. And I want you guys to remember this. Constraints cannot exist in the long run. So actually, let me just erase the stuff that I just drew here with my hideous handwriting and write something that is going to be very beneficial to everyone. Constraints cannot exist in the long run. They only exist in the short run. And the reason why they cannot exist in the short run is because in management, accounting, and finance, we always assume, and please guys, this word assume is very important. And if you're going to write it in your question paper with ManFin, you need to write the right jargon. I can't stress this enough. You need to look at your solutions and you need to read what they are saying. So I'm going to use the right jargon and then say that in ManFin, we always assume, and the word assume there is because it becomes very operative. So we always assume that over the long run, the deficiencies we have today, we can find more or we can sort them out. Let's say, for example, the constraint was the plastics that we couldn't find. Over the long run, if we just cannot find that plastic anymore because they do not make it anymore, as a company, we're likely going to just find an alternative material. If it is labor that we cannot find right now, which is impossible in South Africa, if it is labor that we cannot find, what we're saying is that over the long run, we're going to fix this and we're going to have the appropriate amount of labor. And if we can't find it even over the long run, we can create machinery that is going to help us that not to need that required labor force that we are speaking about. If it is your constraint is floor space, we can always move factories from this factory to another, or we can always extend. But you can see that in the short run, it's not always possible to change a factory. It is not always possible to change material because there's a lot of research that goes in that can take years and years and years. To extend a factory might take time. Moving your operations from one factory to another might take time. So that's why we're saying that constraints over the long run cannot exist, but in the short run, they can exist because it's not possible, excuse me, it's not necessarily possible to change something in the short run. Okay. Whew. But what you also need to remember that even once you arrive at the long run, there is a short run even in the long run. So even though those constraints that you have today, you will not have them in 3 years' time, but in 3 years' time, you will have different constraints, but they will not be relating to what you have today. Because what you have today, we're assuming that over the long run, you'd have sorted it out. And if a company does not have equipment, this is just an example, guys. If a company does not have equipment to produce a product, it may save or get a loan in order to be able to get or purchase that required equipment in the long run. So we're saying that right now the constraint is that we do not have a piece of equipment that we need, but over the long run, what we can do is that we can just go and buy one, save for one, or even just go to a bank and get a loan. So now, how do constraints now go and affect our decision making? So we say how. So we need to remember what we said a constraint is. It is a limited resource that restricts production. How does constraint now go and affect the decision making? One, the optimal production levels cannot be attained when we have got a constraint. So I'm just gonna start this on a different whiteboard. All right, guys. So what we're saying is that the optimal levels cannot be achieved because this constraint is a limited resource that we as an entity do not have in this present time. So those every company has an optimal has an optimal level of production that they want. Let's say, for example, let's take Cadbury as an example. They're going to say for the dairy milk chocolate, we've got a target. The optimal is that because it's the most purchased, we've got 1 million of those a year. The mint one is, let's say it's second place, it's going to be 800,000. For the top deck, it's going to be 700,000, and that is the optimal production level for the entire class of it's the optimal price for the entire range. I'm so sorry, guys. I'm trying to fix this computer. That's why I just keep, it feels like I'm losing my chain of thought, because it is showing me that I was born before 2000, and then I am not living my best life. Okay, there we go. It says, now I asked us how. So we said one, the optimal production levels might not be reached. So what we're saying there, it's because of the lack of resources and
Andzani, I don't know if you can hear me, but I think Andzani, can you hear me? Oh my God.
Sorry, guys, let me try and call him. I don't know what's happening. Let me try and call him and see what's happening.
I'm so sorry, guys. I'm really, really sorry about that. I was having some technical difficulties, but luckily I got to resolve those. I'm not quite sure where I was because even the whiteboard that I was using is lost. So let's just, I think I was doing the house. How I was doing how the constraints would affect the decision making. So I'm just going to continue there, or rather start over, because I did not save that screen and you guys can't get it after this. How constraints affect decisions. So we had spoken about how, one, constraints are it prohibits companies from producing at optimal levels, right? Another reason, so another how that can affect decision making can be the fact that, but also I just want to add that this is not an exhaustive list. This is just a list of things that I put up, and I just put up all of these things so that I can just constantly remember. This is not an exhaustive list, guys. So don't write this out. Oh my goodness, I just need to study this for the exam. It's not how it works. It's a long list of different things, and you can even come up with your own. I'm just putting a list, an example of certain things, right? So it prohibits a company from producing at an optimal level. It also puts pressure on management, in a sense that when management is faced with a decision to make and there's not even enough resources, you guys can see how it can be difficult for managers to choose between the one and the other. Because if they were to choose the one, what happens if it's the wrong decision and now the company's financials are now affected? Can you see how now the management is now put under pressure? Another thing is that it can lead to a loss of customers. What I mean by this is that if I have, for example, usually in a month I produce 1,000 bars of chocolate. I am Cadbury, and I produce 1,000 bars of chocolate in this month. And this month I can't produce 1,000 bars of chocolate, not because I do not have the demand for it, but because I do not have enough resources. Let's say, for example, cocoa powder is now extinct. They say that they no longer have cocoa powder, and you only have 900 units of chocolate that you've sent out in that particular month. What happens in that particular position is that your customers can, in this month, those 1,000 customers that did not get, let's try this again. So loss of customers is like, for example, you're Cadbury and you produce 1,000 bars of chocolate every month. But because of the constraint, in this particular month, you can only produce, let's say, 900. Now you've got these 100 customers that did not get their chocolates for the month. What happens is that these customers can now go to Beacon or any other chocolate producing company and try the chocolate. But what happens if they like it more than yours? If they like it more than yours, you can see the customers are lost. And then you can even eventually lose your market share, which is very important. When you lose customers, it's very, very dangerous because it can lead to you losing market share. But a lot of the other stuff, guys, you can just think about them yourself. I'm just looking at the time because I still need to go through the question. So it's a lot of stuff that you guys can continue to look at yourselves. So now when we look at what I want us to go and look at is I want us to go and look at reaching an optimal production mix. So when we have a constraint, the one thing that we need to constantly think about is an optimal mix. So an optimal product mix. And what I mean by an optimal product mix is, remember when we spoke about relevant costing, and we actually spoke about this and why would one perform a relevant cost? We're trying to find a production mix, right? Or a product mix. But what we're trying to do here is that we're trying to find the optimal product mix. What this means is that we are saying that of all of these products that we're selling in this company, we're selling these products, but we do not have enough resources. But what is the mix that can give us the highest contribution? And I do not say profit, I said contribution. Because remember what we said about relevant costing, we do not take into account fixed costs. And if you take your sales minus your variable costs, what do you get? A contribution. So an optimal mix, an optimal product mix, what that is basically saying to you, it's a combination of products that maximizes the company contribution. So now the next question there becomes, how do you calculate the optimal product mix? Very, very important. This is what we are going to be covering in the question as well. How do I determine the optimal product mix? The optimal product mix, guys, is you can determine it in one of 3 ways. Actually, in one of 4 ways. But for third year, you only need to learn 2, in as far as I can remember. So for second year, you only need to know that the ways that you can determine the optimal product mix of a constrained environment is either 1, through the contribution, or let me just say cost. Contribution per limiting factor. I don't know if you guys know this already. So contribution per limiting factor. What this means, guys, is when the reason why you'd want to choose this is if you only have 1 constraint, or if you've got more than 1 constraint but they have the same ranking. We're going to go through that. So the only time you can use contribution per limiting factor is if you have 1 product, or if you have more than 1 product and they have the same ranking. The nice thing about the question that we're going to be doing today is that it's not using CALF, and CALF is the easiest one. So it's not using CALF, that other one, it's using linear programming. It's a bit of a difficult one, linear programming, but I'm sure you guys are just going to have it, like, you guys are going to have it, it's fine. So contribution per limiting factor, when you've got more than 1 product, more than 1 product, but I'm sorry guys, may I please answer this call? It's very, very important that I answer it. So sorry guys, I'm sorry, I'm back now about that. I was just confirming something with regards to the technical problems that we had earlier. So with this one is you have more than 1 product, but you have one constraint, or you've got more than one constraint, but same ranking. But we'll speak about what rankings are when we do the example, but same rankings. So CALF you use when you've got more than one product, but there's either one constraint or there's more than one constraint, but those constraints have the same ranking. I want you guys to write that down if you haven't. Please write that one down, pretty important, because they might not, they're not going to tell you which one to use. You're always going to need to know which ones to use, because you know that I only have one constraint, so I can use contribution per limiting factor or AA CALF, or I can use linear programming, and that's when we're coming to linear programming. So, let's look at linear programming. So linear programming, you use linear programming when you've got, firstly, two products. So it needs to be more than one product every time. Because guys, the only one that you can use when you only have one product is called network analysis. You don't even do that in fourth year. So in fourth year, you're gonna learn one called simplex method. It's very difficult, but you'll see that you'll pass that bridge when you get there. And the nice thing about linear program is that it does not matter how many constraints you have. So you only use linear programming if you have more than one constraint. So if this is the max. I want you guys to see the difference between contribution per limiting factor and linear programming. With contribution per limiting factor, you've got more than one product. It doesn't matter how many there are. There can be 50 million products. As long as it's one constraint or the constraint have the same ranking. With linear programming, the maximum products you can be making is 2 products, not more than one. So they're not the same. CALF, more than one product. Linear programming, 2 products only, guys. 2 products. 2 product. Is everybody following? And with the constraints for contribution per limiting factor, we have one constraint or constraints with the same ranking. And, excuse me, for linear programming, we've got more than one constraint, which is very nice. But I just want to stop here with going through all of this theory. I just want us to start with the perfect picture scenario, and everything else that I've not really touched on, but I've touched on most of the stuff that I wanted to touch on that is very, according to me, very serious. I just want us to spend the next 40 minutes just going through this question and trying to understand everything that it is saying. So if you've got it on, because I've sent it to everybody on the WhatsApp, I just want everybody to please open it. And I do not recommend that you guys use the way I highlighted, because that's how I used to highlight when I was in 3rd year. I can assure you I'm a better highlighter now. So we're just gonna go through this scenario together. And I wanna show you guys the important things about reading a relevant scenario. And this is why I was particularly excited about today's session. And if you've already got if you already have it in front of you guys, may you please in the comment section, please just leave me a note saying that you have it open and that we can begin.
It's
I see Google says it's open. Google, are you the only one that's on this call?
I've also opened it.
Oh, he's also open, Avila.
Yeah.
Anybody else with an open?
Yeah, I've got it open.
Thank you.
It's open.
I hear a lot of opens, and we're also getting one. Atia's one is open as well. So I'm just gonna continue with it because for me that's enough people. So now let's go and look at perspective pictures. I'm sorry, I think I said perfect pictures. That's why you guys couldn't find it. The name of the title is perspective pictures. So I'm gonna read through the scenario and I'm going to be explaining a host of things. And what I want you guys to remember is with ManFin, the scenarios are quite lengthy, but there's no paragraph that you might not need to use because it's got a lot of qualitative considerations. So just make sure that everything you read is, you note it down at the back of your head somewhere or on the piece of paper that you have in front of you. So it's Perspective Pictures Pty Limited. Perspective was established in 1964. So the most important thing about that sentence there we see is that this company has been there for a long, long time. It has been there since 1964. So because of its age, the age of the company becomes very nice, because what we're saying is that it's likely it's likely a big enough company to sustain itself. It probably has appropriate management. That's why it survived so long. So we're looking at the age of the company, quite old. And it's involved in the picture framing industry. That's when you need to start thinking about the relevant laws that might govern it. But this is more auditing than ManFin. Its key products are the framing of mirrors and pictures. Guys, this is very, very important in ManFin. You need to remember what they're saying to you. How many products do you have here? You've got the framing of mirrors and pictures. So those are your products. It's very important to know what your products are. And the reason why is because some people might come in. ManFin scenarios are the worst. They're a nightmare, because sometimes it's not that you don't know the work, it's that you do not understand the scenario at hand. And the moment you don't know what you're selling, you're done. Guys, you're done. With ManFin, you need to always know what you're selling, right? The company has grown from operating as a home run business to being a market leader in Gauteng. Very, very important. It's a market leader, meaning that when you guys are going to learn about, you're going to learn about these, I think in either later this year or early next year, where you're going to talk about variances that speak to market share. So now we can speak about the market share. So if it's the market leader, that means it's got a very high market share. So you need to make sure that when you're calculating those ratios relative to the market, it has the largest one. The growth is significant considering that the industry is in a declining phase. That is a very, very important line, guys. They're telling you that the entire industry is suffering right now. So it's not necessarily that our company is suffering. And actually, the company is doing very well despite the declining phase. But because it's declining, guys, it can affect this particular company in the long run. So that should be a consideration that you make as well. The fact that, excuse me, the fact that it is in a declining phase, it means that we might now start consider things like retrenchment, or in the future, we might start considering things like scaling down certain divisions, like canceling, declining certain, not declining, or discontinuing certain product lines. All of those things, the moment they tell you that the industry itself is not doing well, that means that people don't want picture frames anymore. Economic conditions right now are showing us that people with jobs that are on a no work, no pay basis are actually suffering a lot. And when you're speaking about things and answering questions, and I hope you guys have noticed that I keep on referring to the COVID a lot, because the COVID is something that you guys, it's a consideration that you guys need to put in a lot of your scenarios. So please do not forget COVID in everything that you write. So even this one, it's a tough economic condition, the COVID. It has put so many people in tough economic conditions, in a sense that they're not making any money. So those goods that they used to ordinarily be able to buy, they're not likely to be able to buy them right now because of certain financial constraints that they might have. I'm sorry. Perspective has managed to maintain a positive market leader by focusing on customer service. So you guys can see that customer service is a big deal for them. And because customer service is a big deal for them, that should be what leads your qualitative considerations. You need to center your qualitative considerations around the essence of the business, because what we spoke about earlier is that when you're speaking about your qualitative considerations, you need to speak about what the goal of the objective of the company is. So here their strategy rather is that they are focusing on customer service. So if I'm going to be focusing on customer service, and now I get this special offer of a once-off customer while I have existing customers, do you guys see how that is a bit conflicting? Because I'm saying that my strategy is customer service, but now I'm leaving my existing customers for this one guy that just came in today, which is one, not fair to my existing customers, and two, it is not in line with my current strategy. So those are how you must think about qualitative considerations. I hope you guys can see it's been about 7 minutes and I'm not even through the first paragraph. This is how much detail you need to be reading your scenarios with, because ManFin guys, they hide the detail in the small things. Maybe we've come up with 3 points here that you can put as qualitative consideration, being the fact that we're a big company, an old company, we're a big company, we are not, there is a declining phase in the industry or due to the economic, due to our way. I always tell you guys that after 12, I don't have English. Now it's almost 3. Okay, sorry, let's just go back to it. The company's clientele includes corporates and individuals. All framing is customized. So remember last year when you guys did job costing and process costing and what's the other one you guys did? Something costing. Because all of the framing work is customized, if we were to categorize this into job costing, process costing, or standard costing, would now go and categorize this into job costing, because each job is customized, meaning that each job incurs its own expenditures. Perspective employs 2 framers to complete the custom framing, providing 320 hours. They put in these small words that trick you out. So here they're not talking about their complete employee base. They're talking about framers. They only have 2 framers. They tell you that there is sufficient capacity for the framers to complete existing orders. However, they have no extra capacity thereafter. So you can see that the moment they tell you that there is no capacity, what must your brain now be thinking? Constraints. Remember what a constraint is. A constraint is a limiting resource. Now we're saying that they say to you that, sharp, for these orders that we have right now, we can complete them. But should we get any additional orders, there is no extra capacity thereafter. It's not saying that we have a constraint, but we can say that it's a possible constraint because we don't know what the rest of the scenario is. So if you look at the one that you guys are using, I immediately highlighted that because I started thinking that, oh, if they tell me something in the next paragraphs, I need to come back to this green one that I highlighted here in order to make sure that I reread it to understand what is the hours that I have available, what is the hours that are not available for me to utilize. In 2013, they received an hourly remuneration of 112. So in 2013, that is the prior year. So you can write that out if you want to. So they used to receive 112 as well as a basic monthly salary. So they would get a basic salary and they would also get an hourly remuneration of 112.50. Guys, in a relevant cost, the basic monthly salary is not a relevant expenditure because I want everybody to switch on their marks and tell me why it is not a relevant expenditure. Come on, guys. I have faith. I have faith here.
Sorry, please just repeat the question.
I am asking why. So they're telling you that these framers get paid like basically 2 types of salaries, a basic fixed monthly salary and an hourly remuneration. My question is, why is the basic monthly salary not part of a relevant cost calculation?
Because it's fixed.
Exactly. That was, I gave it away. It's even in the, it's literally even in the word. It's a basic fixed monthly salary. So remember, guys, a relevant cost is a changing future expenditure. Even though besides these employees, Perspective appoints individuals when needed to install framed pictures or mirrors at the client's premises. The additional employees can only assist with the installation and not with the custom framing. So remember, guys, I told you that they've got these personnel, and they're telling you what each one does. So these extra guys that you have here that are there for installation, they cannot help you in an instance where you need more personnel to come and help you with the framing. Meaning that if we need to add more than the whatever quantity we have now, what we're saying is that in that particular situation, we are still going to have a constraint, because even though labor is available, it is not available for framing, it's only available for installation. Very, very important to remember that, guys. And they're telling you that there is no limited supply of these individuals in the market, meaning that there is no way that that can be a constraint. So immediately out of your head, when you're thinking constraints, the installation personnel is not a constraint whatsoever. You need to chunk that one out of your head. Now they tell you that the table below shows the expected quarterly sales demand for the 2014 calendar year, right? So now they give you Jan to March, April to June, and the other two semester. And then figure 1 there, they kind of give you like I'm on page 2 of 6 now, guys. I hope you guys are still following. They tell you in figure 1, they give you that frame and how their frames actually look. And then they tell you that on average, each framed mirror uses 5 meters of mold, while each frame pictures uses 4 meters of mold. I'm just gonna quickly read through that because all of that is tabulated in that table down there. Mold is a decorative edging of a picture intended to either enhance, make it easier to display, or to protect the picture. Mold is sold in meters. The client produces their own pictures for the picture framing, while Perspective provides the mirror for the framing jobs. The following table indicates the gross profit that Perspective, in light of the looming wage strikes, is expected to earn on average on each of the products. So now they go and give you all of those things, and they give you notes. What's nice about it is that they give you notes. So they give you notes on the mold and the backboard in note 1. So I'm moving on now to note 3. You see in note 3, I was within with that highlighter. Hey, I was within. So I want everybody to pay attention to this one because it's quite important, and this is where we're going to find the constraint, and we're going to speak about the constraint here. I want to have a clear whiteboard for everything that we are going to be doing in note 1. Note 1, very, very important, guys. So it tells you that there is an unlimited supply of raw materials with the exception of the backboards. An inventory count inspected that we have 500 meters squared on hand. Does anybody want to tell me what that 500 meters squared is? No one. I'm gonna guess no one. So I'm gonna write backboards. We've got 500 meters squared in the store, but they're telling you that there's an unlimited supply of raw material except for the backboards. That means that the backboards are likely going to give us a constraint. So I'm going to write const there. So they're likely going to give us a constraint. So that means that when we're reading something like this, we need to be very vigilant to see if a constraint actually exists or not. Because sometimes they can tell you that we can get it from another country. We just need to buy it from another country. If we can have access to it, it is not a constraint. If something is difficult to find, guys, it is not a constraint. It is a constraint if you cannot find more, not if it is difficult to find. If you cannot afford it, it is not a constraint. Your constraint can be the fact that you don't have money, but it is not the underlying product. So we need to, you need to draw a line between a constraint and you just not having money to buy something. The constraint can be you not having money, but it's not the product, it's the resource itself. Cool. So the backboards are supplied by a Russian-owned company based in Johannesburg. The company imports all the inputs from Russia. Due to the conflict between Russia and the Ukraine, the South African government has decided to ban all operations of all Russian-owned companies in South Africa. As a result of this, backboard material is in short supply in South Africa, and there is uncertainty regarding when the ban will be lifted. So it is very important because, guys, we've just seen that we might have a constraint. We're not saying we completely do have a constraint, but we're saying that we might have a constraint because of what they told us. That we only have 500 backboards there. But you guys see that if I have 500 backboards, Bahlali, what if I need 502 to even meet my current demand? Where is it gonna come from? Where is it gonna be going? But we're gonna be looking at that as we go. So now let's go look at note 2, and note 2 now relates to the math. It says that Perspective buys a variety of maths for its framing jobs. Math is only used in picture framing. Remember, it's not used in both product, guys. So when you're going to calculate the amounts that go in there, do not put this math into the mirror framing. It tells you that math is only used in picture framing. So what you can do is maybe get a different color and write it there, only for pictures, so that you remember, not mirrors. Cool. And I'll tell you that a mat is a thin piece of paper-based material included in a picture within a picture frame, which serves as an additional decoration and to perform several other practical functions, such as separating the art from the glass. Mat comes in different designs and colors and is sold in square meters. As at 31st of December 2018, Perspective had 1.5 special mat imported from France. So here we know that they had 1.5 meters squared as at the 31st of December 2013. The 1.5 special, they imported them from France. The mat had been ordered at 20 Rand for a special job. Once the job had been completed, Perspective realized that they'd bought too much of the mat. A competing frame company has offered 10 Rand per square meter to buy the excess. Do you guys see that? That is an opportunity. So now I should have actually asked you guys this without telling you guys. So what we're looking at there is like an opportunity cost type of vibe. The reason why is because you can either use this in your production or you can just sell it to another one for 10 Rand. So if I decide to use it in production, those mats, I forego what? The benefit of getting that amount of money from the other client. So if there's somebody that didn't understand when we explained the opportunity cost earlier, this is the perfect example to help you understand. So what we're saying here is that the opportunity cost is foregoing the selling of those mats at 10 Rand per square meter. I hope that makes sense. So you can either sell them or you can use them in production. If you choose to use them in production, what do? You have an opportunity, cost there that you need to take into account. So what I'm going to write here is opportunity costs. So when we come back, we can speak about this. Cool. In note 3, they give us notes about the mirror. So now they tell you that mirrors are bought for mirror framing jobs. I mean, that's a bit obvious, but I think it's important because in a test right now, guys, we are all sitting in our respective homes, very comfortable. We are saying, I won't forget, until you get into an exam and you realize that you put the mirrors for the pictures. So you need to write there so that every time you come back, it is there to remind you that it's only for mirrors. And even though it's telling you that it's mirrors, you can capitalize it to the wrong thing when you're under pressure, guys. It's a highly possible thing, and we all know that it's very, very possible. But anyway, they say that while glass is used only in the picture framing. So the mirrors they use in mirrors, and then they use the glass in picture framing. Right. So now they go and tell you that Perspective has 6,000 meters square of glass. Now they're giving you numbers there. They've got 6,000 meters squared of glass, and they have got 2,500 meters square of mirror. The mirrors and glass were bought at 20 Rand per. So these were both 20 Rand, which is nice because you don't have to split the costs. I like it when people are considerate of students. No, I want to take this off. Come on. want to take this off. There we go. Cool. So now they're telling you that all of this stuff was bought. Shoot. I'm sorry, guys. I just accidentally stopped sharing the whiteboard because technology is dribbling me. My favorite dribblist is dribbling me. So I lost all of that data, but I'm sorry for that. You guys can read it from that. So it's 20 Rand per glass or mirror. Very important that now they're telling you that, however, they have not yet paid for, as Perspective has a 60-day line of credit from its supplier. So you need to highlight that line, because now we're going to be thinking whether do we put it in our relevant cost or do we not put it in our relevant cost. Very, very important. So I want you guys to highlight line note 3, and it's something that you need to pay attention to. Now note 4, they're telling you, and they are giving you note 4 on the labor. Usually, guys, when they give you notes on labor, you need to pay very much a lot of special attention, because labor, usually they want you to calculate certain things like like a learning curve on how those people, if they have a learning curve when it comes to that. So it's very, very important that you pay attention when you are doing labor. Manfin really loves to test labor, and not from a qualitative point of view, usually from a quantitative point of view, where it requires a lot of calculation from your part. So it tells you that on the morning of the 28th of February 2014, Mr. Arthur woke up and the following headlines in the newspapers. And then they give you the headline there. Employees at Perspective are happy with their working conditions and have decided not to join the strikes that may take place. One thing that you need to do once you guys start doing performance evaluations of management, that line that says employees at Perspective are happy with their working conditions is very, very important, because it's a qualitative consideration of how a particular manager should be rewarded or not rewarded for their performance in a particular time frame or particular time period. So that is a line that you must always remember, that if employees are happy, that means that the management is treating them very well and perhaps should be compensated for their hard work. They would, however, like a 20% increase that the union is demanding. The increase would be effective immediately, and the labor rate of 135 and 114 above already include the increase. Perspective do not require the employees to work overtime. So they're telling you that the amount that they have there in that table on page 2, the 135, sorry, the 135 for the labor hours and the hanging of 144 is all including the raise. Because if you remember correctly, if you go back to the second paragraph, they'd already told us that these people are making 112.50 in 2013. So now in 2014, they've just pumped it up by 20%. One thing that I remember when I did this question the first time, I first went and I took the 112.50 and I multiplied it by 1.2, which is the 20%, in order to get the amount, and it actually does reconcile to 135. If you're an anxious person like myself, I'm just giving you a heads up, it actually is correct. So moving on now, additional information. They tell you that all other costs incurred during the assembling process are negligible. Based on the current resources available to Perspective, management has calculated an optimal monthly production. Now they're giving you the optimal monthly production. They're telling you that the optimal monthly production is pictures, mirrors, is 200, sorry, 400 and 200 this side, right? So although Perspective cannot control the customers eventually demand, sorry, what customers eventually demand, the market effort has influenced customer purchases to match the optimal mix. So we know that the optimal demand right now is 400 and 200. That means, guys, we can even go and see whether or not we have enough backboards. Remember note 1, when we spoke about backboards, we can even now go back and see whether we have enough backboards to produce our existing demand by saying that we have 500 meters squared of backboards, and backboards, it uses 1.5 in the one, it uses 0.5 in the frame pictures. We might not even have enough backboards to meet current demand. So that makes that that much more interesting. That's why I chose this particular chart. And I want you guys to pay particular attention in this next part here. And the reason why I want you to pay particular attention in this next part here is because it's something that a lot of people that do relevant costing and constraints for the second time tend to struggle with. So one, before you go and look at a special, I'm not gonna start reading with the special order. I want us to go and look at the existing order first. So before you look at the effects of the constraint on the special order, you need to look at the effect of the constraint on the existing orders. So we need one effect on existing. Before you go and look at your special order is going to come after, guys. Now we're going to look at the effect on the existing order. If we go on page 2, where they tabulated how much meters they use, they tell you that the quantity for framed mirror is 1.5. It needs 1.5. But for how many framed mirrors do we expect to make in this month? We expect to make 200, I think. Yes, and the frame pictures, they use about 0.5 multiplied by 400. If we calculate this, it gives us up here 300, 1.5 multiplied by 200, which gives you 300. And then 0.5 multiplied by 400 gives you 200. So this is how much I'm going to need. Do you guys see that? That means currently I have enough to perform my existing orders without considering my specific orders. Let me just, I want everybody to forget about perspective pictures, but we're going to use the same example, but we're going to say, what would happen if backboards, they only had 400 meters square of backboards? So you see, would need this, but we would only need what we have would be 400 meters squared. Do you guys see that? This is what we'd have. Now that means that we would have a problem then. That means that we would need to now first adjust for the constraint in the existing orders before we can adjust for the constraint in the special order. So what we would have to go and do now would be to determine an optimal mix for the existing orders. So what we'd go and do now here is, let's assume that this would be the only constraint. What we would do in that particular scenario is that we would now go and change the 400, 200 thing to make sure that we've got an optimal mix of these two. So how we do that is we'd say which one gives us the highest contribution between this one and this one, and the one that gives us the highest contribution, we produce all of it, and the one that gives us the least contribution, we produce the difference that takes us up to 400. I hope that makes sense. So calculate the contribution for this one, you calculate the contribution per unit for this one, and then how you do it is that you produce the one, let's assume that this one gave me the highest contribution and this one gave me the least. So I'll produce 300 of this and 100 of this in order to meet the 400 that I have here. I hope that example makes sense. It's just an example of what you would do if if the 500 meters squared did not reconcile to what we actually need. So just showing you guys how you would do it in a different scenario. And I know Vets likes to test that one, but usually for CTA. So now let's just go, because we know now that the existing order, guys, I just want to repeat this one more time. With your existing order, never and never in your life go and skip the existing order before you calculate whether or not that existing order has a constraint or not. Don't just run now and move to the special order, because sometimes the constraint exists within the existing orders. So please start with the existing order, account for the constraint in there, then you can move on to the special order. Now let's start with the special order. A Johannesburg-based bank, Megabucks Pty Ltd, as part of its corporate restructuring, recently moved its head office To commemorate the 100th anniversary, management decided to hang 100 paintings at the bank's new head office. The procurement officer, Mr. Smith of Megabucks, sent the following email. Dear sir or madam, what they're asking there, let me just give you the crux of the things. What they're saying is that they want 100 frame pictures with a dimension of 2 meters is to 2 meters times 1.5 meters, and they want it by the end of April.
Shut the fuck up, bruh.
And then they want to pay 180,000 rand for that particular transaction. That is all that is stated in that email. It's not something that I want you guys to read because we don't have enough time remaining. And if we go to page 5 of 6, they tell you that in response to the request of Mr. Arthur, immediately set off to determine whether accepting this order would be worthwhile. Guys, this is where they're telling you about constraints. They're telling you that this guy needs to make a decision. And when they're telling you that he needs to make a decision, that's where the bells need to start ringing. They're telling you that he needs to determine whether accepting this order is worthwhile. He first identified the resources that would be required and their quantities. He documented these these as follows. He told you that mold now would need 7 meters. Ordinarily of mold, how many would we need? We would need 4 meters, now would need 7. Now they're telling you for mats, we still need 1.5, which is great. Glass, whatever that is, 2 to x 1.53 meters. And then backboards, we need 3 meters. And then the staples, whatever. But let's just go through that. For note 5, what they're speaking about there is the mat. They tell you that Mr. Arthur noted that you could use some of the unsellable mat discussed in note 2 to complete this order. He has not, however, discussed this with Mrs. Smith. So the thing is with the backboards, guys, remember what not the backboards, the mat, they bought them for a certain other event. Now that means that they were not in use. Let me just quickly go back and make sure that I'm reading the right things. Yes, they were not in use, but they already had someone who had offered to buy them from them. That means that they now have an opportunity cost when it comes to those mats. So if they decide to use them in the production of these things of the clients, what's going to happen is that they're going to lose out on a certain amount of consideration. And in note 5, that way I would write out that consider the opportunity cost. When we go into note 6 there, it speaks about the staples. It says that it was also decided that each frame will require 20 staples, special staples. Perspective currently has 3,000 of these staples. They bought for 2 cents per staple. There is no further uses for the staples. Guys, these staples do not have a job in this particular company. It's just that they're idling, so they do not have a value in any other production space. And because they do not have value in any other what would you guys do with them?
Oh,
I'm gonna
my
take
God, guys, look at this.
Nabila, your mic is on, as by the way. So what you would do with these staples, guys, is nothing. You can't do anything with the staples because the staples have already been bought and they have no other use in the business, meaning that they don't have an opportunity to be used somewhere else. Should they have had an opportunity to be used somewhere else, we would include in the relevant costing their market value. We want to include their market value in the relevant costing. Please remember, guys, if something is sitting and idling and it does not have any other use, you do not have a cost for it in your relevant cost calculation. Right. Number 7, it says that it would take 30
Can I
minutes
please
to hang
ask
each of the.
something?
Sure.
Can we not assume that we could sell it? So we can only sell it if they told us that we can sell it at a certain amount.
Yes, but here I understand your question, right? But here the underlying thing that should have led you to saying that it's 0 is because they do not tell you their intention to sell them, but they tell you that in the business they have no alternative use.
Oh, okay, thank you.
Thank you for the question. I really enjoy questions and nobody has asked me a question. Thank you so much.
Okay.
So now let's just go back and look at note 7. So with note 7, I want to write on the screen, you guys have done constraints, right? I'm sorry, you've done learning curves. So I'm going to go through the learning curve, which is in note 7 now. So in note 7, we're going to be doing the learning curve. So in note 7, they tell you that it would take 30 minutes to hang each picture frame. At present, prior to the strike, waged employees hanging pictures are paid 120 per hour. Before the special order, Mr. Arthur decided to train his picture framing team to enhance the skills. The cost of training would be 5,000 Rand and would be beneficial to satisfying this order. The manufacturer of frames uses the dark brown mahogany molding to slightly, is slightly different from the other ones. Okay, cool. So what they're telling you there is that, I'm sorry, I'm just gathering my chain of thought. Now, what they're telling you here is that there's going to be a learning curve because these new frames are made from this mahogany material that the company is not used to yet. So because these guys now have this new thing, we need to calculate what the opportunity cost, or sorry, not the opportunity cost, we need to calculate what their learning curve is to produce all 100 of megabucks picture frame, right? So now, I'm trying to look for my calculation. It is, okay, cool. So now let's just quickly read through note 7. I'm sorry, the last note, and then we can do the calculation for the learning curve. Note 8 says Mega wants a special mold for this project. Perspective does not keep this type of mold in stock and will have to order it. The order mold is of the highest quality. The current price is 150 per meter. The last paragraph there says Mr. Arthur had his employees assemble one frame to the specification of the special order to get an idea of how much it would take them. So I'm sorry, it was not note 7 that I wanted to make a note on. It was the note above the table there, below the table, sorry. The one that says Mr. Arthur had his employees assemble one frame. So they had assembled one frame to see how long it would take them, and it took them 1.5 hours to do one frame, right? And with the training and the learning, Mr. Arthur believes that they have a 90% learning curve every time the production is doubled for this order. This order would need to be completed within the month of April. So now he has indicated that he is willing to accept the work if the markup is 30% on cost at a minimum for this project. So that's something that you need to keep at the top of your head, that the markup needs to be 30%. So whatever you calculate at the end, you need to calculate the markup of 30% given the 180,000 Rand that Megabucks is willing to pay. So when we calculate learning curves, guys, do you guys agree with me that if you do something for the first time, it takes you longer than if you're doing it for the 10th time? So that's what a learning curve primarily is. It gives you a formula that says that, sure, today it took you 1 hour to do something, but because you have experience, tomorrow it might take you less time. And now they go and give you this formula, which is y equals ax to the b. What this formula means is this is the total time that you're trying to calculate, the time it took you for the first item. And then this is how many are you willing? How many, it's not willing, how many do you want to make? And then this one is basically log, right? Of the learning curve. So I'm going to say log learning curve divided by log 2, or yes, log 2. So that is the formula. So the formula is always going to be divided by log 2. So the bottom is always going to be divided by log 2. What this is going to give you guys, it's going to give you the total hours it's going to take you to manufacture a certain item, right? Sorry, it's going to give you the average time it's going to take you to measure every. I said something wrong here. Please watch as I erase. I'm erasing this here because it's wrong. So I'm going to write the right stuff. This is the average per unit. It's going to give you the average per unit. I'm so sorry about saying total. I think I was reading total somewhere on the scenario and I decided to put in the word total for vibes there. But now let's just go and look at that formula and try to put it into practice now. We have said that it is y equals mx. Sorry, I'm so used to linear stuff. Y equals ax to the b. What this is, they told you that it's going to take them it took them 1.5 to make the first frame, and they want to make 100 of those frames. And now we're saying it's to the log 0.9 because the learning curve was 90%. I hope you guys remember that. Divide this by log 2, which is what it always is. When we calculate this, it basically tells you that it's going to take you 0.7449 recurring to do hours. This is the average time it's going to take you to do a unit. But now we need to remember how many units are we trying to make. We're trying to create 100 units. So when we multiply that by 100, it gives us 74.49 hours. That's the total hours that we're going to be using. And then with regards to that, we can just always calculate the amount of labor that they're using, which is multiplied this by 135, but that is not really important. I just wanted to show you guys how you would ordinarily go and look at your learning curves. The learning curve is very important with regards to that, guys. So what I want to go through, guys, I'm being short out of the session because my time is actually up. So I have a constraints portion that I really wanted to go through, but I just would really want you guys to, I want us to look at the constraint itself just quickly, because before I get shouted at, because I always go over my time. So what I'm gonna do now, I'm gonna put in a new screen. I just wanna speak to you guys about that constraint that exists there. So when you go and look at the mirror and the pictures, you'll see that in the table there on page 2, they give you a gross profit there. I'm gonna quickly say mirror, then pictures. So here we've got a gross profit. In the gross profit, it tells you it's 81 for the mirrors, and it is 96.95 for the pictures. But now we're not looking for, remember what we said with the optimal level, we're always looking for what? The contribution. So we're not looking for the gross profit, we're looking for the contribution. So now we need to add back all our fixed costs, and the fixed costs were given there as 20, and the fixed cost for this were given as 30. So now that we've added back the fixed cost, what we have is a contribution, and this contribution is 101 here, and the other one is 126.95. So now what we're going to do is that we've seen that we've got a constraint with regards to the backboards. Another constraint that I'm sorry we didn't get time to speak about is the labor. Because if you think about, remember the labor, they said that the existing personnel only had 320 hours. But if we took into account the hours that are required by the additional project that we just said, we needed 74. I'm just gonna write it up here. So this down here actually, we said we need 74.49 hours for the special project, but we already are using 300, and we need 320 for existing project. That means in total we have too much hours in need, but we don't have enough hours on hand, because they said to us in the scenario that we cannot go and get additional labor should we want it. So you can see now that this is what we need, right? But what we have is 320. So you guys can see that we have a constraint, and a constraint is of 74.49 hours that relate to the particular, they relate to the what's this? They relate to the special project. So this is our constraint for the labor hours, but we also said that we've got a constraint
And
for
then
the
can I ask
blackboard.
something?
Sure.
When we're calculating the contribution, should we take into account whether the business is using variable costing or absorption costing?
Remember, when you're calculating a contribution, it does not matter if it's absorption or variable costing. And the reason is because you're calculating a contribution, and a contribution by definition is a selling price minus variable costs. So here we can always just assume that this company uses absorption costing because they gave us gross profit, and a gross profit includes fixed costs. So if we're trying to work back from that, we just add those fixed costs and we end up with our contribution. I hope that is answering your question.
Yes, thank you.
Sure. So now we've got this second constraint. So we've got a constraint here. We say it's labor, but we've already said that we've got a constraint on the other side, which is our backboards. So now we need to see, remember what I said to you guys about how constraints work. If you've got more than one product, but one constraint or constraints that have the same ranking, we can use contribution per limiting factor. Or if we've got two products and more than one constraint, we can use linear programming. So now, because contribution per limiting factor is the easiest one, I would always advise you guys to start with that one. I just want to show you guys how contribution per limiting factor works, and then you're always going to start with that one to see if it works, and then you're going to rank those. You're going to rank your you're going to rank them, and if they don't have the same ranking, that's when you move on to linear programming. So now let's look at I'm gonna just write mirrors and pictures. So we said that the contribution of them was 101 for the mirrors, 101 for the mirrors, and 126.95 for the pictures. That was the contribution, right? So now we're saying that what is labor? Backboards and labor, our constraints. So how we calculate a contribution per limiting factor, guys, is you try to ask yourself, how much does that particular thing, the backboard or the labor, contribute to this? So we say that the backboards, we are going to use how many? 3 meters for the, sorry, let me just put this in a calculator so I say the right stuff. For the backboards, okay. So with regards to the backboards, we say that the backboards are contribution per backboard. Backboard 1.5. Okay, cool. So contribution per backboard, for this one, we say that for mirrors, we're going to only use how many? We use 1.5, right? So we're going to divide that one by 1.5. So it's going to be 101 divided by 1.5. That leaves us with 67, right? This one, for pictures, we only use how many? 0.5. Remember in the scenario, in the table, it showed us that we only use 0.5. So we take 126.95 and then we divide that by 0.5, which gives us 253.9, right? So that is a contribution per limiting factor, or contributing per limited resource. So the limited resource here was the backboards. So the backboards for mirrors, they contributed 1.5, and for here, they contributed 0.5. So we went and we took the contribution and we divided it by the limiting factor being 1.5 here and 0.5 there. That's how we got to that amount. When we go and look at the labor, so now we're saying that the limiting thing is labor here, but now we need to divide it by the amount that is required for that. So we say that labor was 0.53 for mirrors, and how many for the other? 0.8. So we're going to take 101 divided by 0.53, which gives us 190.5. And then when we come to this other one here, we take the 126.95 and we divide that by 0.8 to give us 158.68. So let me show you what I meant about if the rankings are the same for anyone who did not understand. So when we rank these things, guys, we need to say which one has the highest contribution. And the one that has the highest contribution is the one that we're going to put as ranking number 1. So this one is ranking number 1, this one becomes ranking number 2. But when we come to the labor here, we say that this is number 1 and this is number 2. Can you see that the rankings are not the same? So here for backboards, the one has a higher, the one is the contribution per limiting factor, the highest one is for picture frames, but number 2 is mirrors. Now, but when we look at labor, it's vice versa. What this means is that we cannot use contribution per limiting factor because the rankings are not the same. If it had been 2, 1, 2, 1, then we could use contribution per limiting factor. But now what we need to go and do is that we need to go and linear programming. And the reason why we consider this is because linear programming says that you need to have 2 products, which is what we have, and more than 1 constraint, which is what we have. How to do linear programming? How to do linear programming is that you need to, sorry about that, guys. Linear programming, you need to go and do a formula pretty much. So what the formula is that you now have gone and you've calculated what your constraint is. So we went and we said that our constraint is for labor. So for labor, we said that the constraint is the fact that we have 320 available hours, but only 74.49 of those hours are used for the special order, meaning that what we have remaining now is 245 and 51. And then for the backboards, we've gone and said that we had 500 meters squared of those, but we're going to use 300 of those in the special order. That means that our constraint now becomes 200. So now we've got this constraint. What you do when you've got this constraint now is that you now need to go and determine a constraint function. A constraint function is basically you saying that what is the